Hi everyone. In this video, we are going to discuss the results of Axis Bank, which was released today. So the margins have been very weak. Provisions have gone up, whereas NPAs have improved. Let's see the results in detail. So when we look at Axis Bank results, net profit fell 26% year on year to 5,090 crores. So well below estimates. Next thing, operating profit. This is also down 3% year on year. Core profit is up 3%. Overall, this is also a disappointing number from the company. Then net interest income. This is again when compared to other large banks, flat growth, 2% year on year growth. Fee income is pretty decent at 10% growth. Whereas still net interest income is not growing much. So management is saying it is focused on agile, inclusive, and all-weather franchisee. We have to see how the company can actually improve from here. So in terms of business growth, the deposits have gone up by 11% year on year, whereas advances have gone up. Basically, advances are nothing but loans. So bank deposits 11%, advances 12%, which is really good. So they are lending more than what they are borrowing as deposits. So retail loans, 6.35 lakh crores, 6% year on year. SME loans, good growth, 19%. Corporate loans, 20%. So CASA ratio is steady at 40%. So balance sheet is up 11% in terms of market to market. So the primary problem for the company is, which is the most important headline across all medias, weak net margins. Net interest margin is at 3.73%, down from 3.8% last quarter. So this is expected because interest rate cut has happened. So all the old deposits continue to remain at the older interest rate, which is high, whereas all the new money that's been given as loans are given at a lower interest rate. So it is obvious that the net interest margin will remain low till the base effect kicks in, probably in the next quarter or two. So in the second half of this year, we can expect net interest margin to improve. So there is a proper loan mix shift towards corporate and term deposits. This is increasing pressure on the company. So HDFC, ICICI have been successful by focusing on retail loans. So even ICICI, when they turned around, they focused on retail loans and they were able to do well. Whereas Axis Bank is predominantly focused on corporate loans, SME loans, etc., which has higher NPS and provisions compared to what is the issue in retail loans. So domestic net interest margin at 3.82. There is a narrowing spread across segments. So weak net margin is one major issue. Next one is provisioning. So the company has a total provisioning of 3,547 crore this quarter when compared to last year quarter of 2,484 crores. So this includes a one-time 1,231 crore provision for discounted crop loans. This is based on the RBI advisory, due to which in Q2 they made a lot of changes in reporting their provisioning. So was considered a one-time thing last quarter. Now there is some more money that is basically made as provisions. So 1,234 one-time provisioning, which is again having a deep impact on the margins of the company. So the credit cost is down, which is a good sign. Overall provisions are at 13,262 crore, which is like 147% of gross NPAs. So after weak net margin, one-time provisioning is another issue. So asset quality is improving compared to last quarter. It is down from 1.47% to 1.46% gross NPA. Net NPA is down from 0.45% to 0.44%. So slippages have also come down from 8,200 crore to 5,696. So recoveries are at 2887 crore. So there is a marginal improvement in asset quality. So retail asset quality is stabilizing. So slippages from retail is coming down, which is a good sign. So let's look at the subsidiaries performance. So combined 1%, which is flat, PAT of 936 crore. So Axis Finance is having a 18% PAT growth and 0.42% NPA, whereas AMC is growing well at 11%. Securities is generating a profit of 175 crore with 15% customers. So let's look at the operating expenses. So operating cost is another issue. So after weak net margin provisioning, the other major issue is operating cost. So it is up 5%. So the margin has come down. So IT and growth investments have gone up to 10% of total operating expenditure. So CASA ratio is down. So overall, the company is trying to improve efficiency, but the operating cost is going up. As long as this remains high, it continues to uh, keep the stock price down because of this. So let's look at the overall outlook. So there is a focus on granular growth and asset quality control for the long term. So management is expecting stable margins as deposit costs peak out. So deposit costs will start coming down because all the deposits that have been typically 1 year, 2 year deposits will all uh, end their tenure. So whenever that happens, slowly the deposit cost will come down because once you renew your fixed deposit, the interest rate will be the new interest rate that will be taken into account. So they are trying to expand in SME, rural and digital lending to drive the next phase of growth in the banks. So this is another interesting opportunity they are looking at. But again, SME is one area where the chance of high NPA is there. So there is always a cautious tone on profitability from the management. There is high provisioning. There is high net interest margin pressure. So overall, the quarter is disappointing, weak, negative, with flat, no growth, just 2% net interest income growth and a decent 10% growth in fee income, whereas profit margin is down, operating margin is down, provisioning is down, provisioning has gone up. There is a one-time provisioning. So all the numbers look weak. There is only one solace, which is asset quality control, where the NPA has come down marginally, that to very small amount. So overall, this is not a great quarter. So we may expect some recovery in the second half. So the company may remain bearish. So in terms of charts, in 1 hour chart, Axis Bank has become bearish. Over the last 2 days, it's been trading weak. Maybe it can continue to do so because of the results. So this video is for educational purpose. Do your own due diligence before taking any investment decisions. If you like this video, if you like to see more content like this, please subscribe to our channel. Thanks a lot. Happy investing.